Whether you're a Dogecoin enthusiast or you just really like that cute dog, Doge is posturing to hit $1.48, which would be 6x from where we are right now. But if we break through our overhead resistances, we might make it all the way to 786, which would be a 28x return from where we are. Now, despite Dogecoin's meme status, the fact that people don't take it seriously, there's a lot of history going back several years, all the way back into 2014 on at least my platform here. Ever since 2014, we have had a series of rallies come up, what I'm labeling here as a big wave 1 and a big wave 2. And our recent rocket launch earlier this year, I'm currently labeling as a wave 3. It fell just short of our 1.382 extension target, but it's close enough. That's a point that I'd like you to remember because I'm going to bring that up again later in this analysis. Something to note that despite in the smaller picture that not hitting the ideal third wave targets, we've had powerful fifth wave extensions that took us all the way up beyond the standard fifth wave targets. So those two little factoids tie hand in hand. Now, we're posturing, as I mentioned, posturing, I use that word again, to hit a small fifth wave to complete our overall pattern. That is projecting up into some of these targets, which I'll get into in a second, but we have strong resistance at 85 cents, which I have marked with this blue line here. And that's right near our former all-time high. And there's some confluence with that number with some of the previous rally fib extensions that we have here. So if we can break through that, we have some good targets overhead at our usual 0.382 extension, 0.5 extension, and 0.618 extension of our overall 3-4 pattern. And those numbers respectively would be $1.80, $3.76, and $7.86. That's a big target we have that I would like to see. Now, while we're on this chart, word of caution here. There is an alternate pattern that I have marked in red lettering here. I'm going to zoom up just a bit so we can look at this. And I've actually touched on this several times in a couple of the other crypto analyses I've done. But that pullback we had earlier in this year may actually be an A wave, a larger pullback, and we might be in a fake out rally in the B wave. That would mean that we have another leg down in a C wave that could take us down all the way to the 50, 60 cents range. And the reason I point that out is that when we look at our targets here, we hit our third wave in the 1.32 extension. Typically, you have a fourth wave go below the 1.0 extension, sometimes as far down as the 0.764. So we didn't quite have that kind of a retrace, and our pattern is not the cleanest pattern. But right now, again, the blue is my primary. I don't expect that to be the case, but it's just something to keep in mind. The good thing, however, is that we finished a small first wave, and if we look at our MACD, which indicates how overbought or oversold we are, it's starting to curl back down, which is a good thing. We rallied up very quick across all the cryptos, and the MACD curling down sets us up very nicely for a more powerful rally subsequent to this wave 2 completing, which actually may be done. When we look at our smaller picture, we have what I'm calling, again, a 5-wave pattern that got us our first wave, and we have presumably completed our wave 2. And the wave 2 actually finished right inside of our box. So it went a little deeper than 38.2% retrace, but it finished there. And I presume that we're done with this correction and that we're about to take off. Now, if we actually, when we take a step back, as I mentioned earlier, we have a lot of non-standard targets for our third waves. You see the same thing on this micro picture. When we look at this 1-2 setup, typically your third wave is going to hit a minimum of the 1.382 extension. Here, we fell just short again. And it depends whether it's this one or it's this peak here. That's the third wave extension. Whichever it is, we had a powerful makeup rally in our micro fifth wave here that took us beyond the 2.0 extension. So again, that's bullish because again, in Elliott waves, patterns are fractal. We might see the same scenario play out again in the bigger picture, which would take us, of course, into a bigger third wave. So assuming that we hold 23 cents, which is right below, we can keep rallying. I'm going to bring that 23 cent support level up again because, again, big picture, remember I had that alt pattern with the red markers on it? If this thing pulls back, Doge may serve as kind of the canary in the coal mine for the crypto complex on the whole. We have that alternate pattern more or less similar pattern across all cryptos. So it's something to keep an eye on, but I don't see it as a high probability right now. But if we do make it past that, if we do correct below that red marker there, again, we may be in for some volatility. If we do hold all that and we go into the third wave, my standard targets are telling us 52 cents to 56.7 cents, somewhere in that range. But again, based on the fact that we've been falling short of our third wave targets, our standard targets, wouldn't be surprised if we fell a little short of that. After fourth wave consolidation, our fifth wave would presumably take us to 59 cents to 64 cents. Those are our standard targets. And again, we may see the fifth wave actually outperform. It's almost as if the fifth wave makes up for the third wave not doing as well, at least in Doge. So don't be surprised by an upward surprise. Other than that, if you are buying, again, dollar cost average is the way to go, but pretty good time to go lump sum if you would like to get a larger position in Doge. So until next time, thank you for watching and happy trading.